People put 60 million bucks into this, right?
Yep.
They've pretty much lost most of their money. Something's gone wrong along the way.
Yeah.
But you're saying you know a lot about this as a result.
Yeah.
What are you doing with that data? We've got a plan to monetize this for
it's working.
existing shareholders, right?
Yeah.
It also says for new shareholders, you can come in at a discount. Do you think you're going to be able to raise capital in this market, given the track record of this company, given where it's at the moment? Hello and welcome to our viewers on cruxinvestor.com. We're here today with Frank Basa. He's the CEO of Granada Gold Mine. We're going to talk to you about a few things today, Frank.
Yes.
It's been a long, checkered history for Granada.
Horrible.
But you got some good things to talk about.
Yeah.
So let's get stuck into that. Give people a minute background.
Yeah.
Not too much detail, just a minute background, and we'll talk about the evolution and where this thing's going.
Yeah, maybe we'll step a little back and I'll tell you what we are. We're actually a group of older people who take over distressed assets, which this company was a distressed asset, and distressed properties. We put them together, and we took this company from a halted company. 18 months later, it was 120 million market cap, and we gave them 2.6 million ounces open pitable. Market crash, we crashed, and under my watch, I ruined the company. So I'm not blaming anybody else but myself, but I turned it around. So we changed the name, consolidate, raised money, and now we're producing drill results at the camp, or this thing really deserves to reflect what it's valued at.
So let's talk about precisely what you think went wrong, because if you know what went wrong, you can see it and it won't happen again. So tell us about what you think was going on in the market then, which affected the company.
Basically, we should have acted sooner. The property was designed to be sold. We should have acted sooner. Instead of waiting and dragging it out, we did get offers. We waited too long. We did get a very good offer at the end. Market crashed, we crashed. The whole property was designed, this is what we do. What we do is we package assets for the end user. In other words, it's preferable that somebody comes in, and we understand on the Cadillac trend, there's about 10 mills. They're all short rock. Some of them are shut down. The intent is to sell this asset to an end user.
End user being a producer.
Yeah,
right.
And we got the permits for them, we got everything. But we waited too long, and what happened is the market crashed, and of course we crashed. We got delisted, and now we're recovering. So
when was that, the delisting possibility?
3 years ago.
3 years ago, okay, right.
I mean, we're in a tough situation. Like all the juniors, all the gold juniors were in a tough situation. We managed to turn it around. We personally put in, we put in $750,000 to keep it alive.
So when you were talking to potential buyers, I mean, what did you have? So the sheet of paper said what? We've got X million ounces.
Yep.
What did you have?
Well, actually, we intentionally only explored 20% of the asset, so that people have room to add to it. The reason we do it like this is because we take paper for paper. In other words, they give me paper for my paper.
Right.
If they keep drilling, of course, the resource will go up. So, originally we did 2.6 million ounces. We want to take it to maybe 5-6 million open pitable.
And then what sort of grades are we talking about here?
Gram plus, eh?
Right. Okay.
Yeah. So it was possible at that time. In reality, between then and now, everything changed. Fuel costs went up. And the ideal thing, this thing is actually, as it should have been done, is a high-grade underground mine, 8 to 10 grams.
Okay.
So now we're drilling to reflect that potential.
So we're segueing here from what went on to what you think the future looks like.
Yeah.
Okay, so I noticed in your presentation, everyone should have a look at the presentation. Page 6, you got some drill results from last year, but it's your more recent drill results that I guess you want to focus on.
There's some real exciting drill results. Actually, the grades were reasonable. It was the widths that surprised us. Now, the structure itself is actually 400 meters thick, and basically it's 50 degrees from horizontal. It seems to be 5.5 kilometers long. There's 9 to 22 veins in there. Normal grades in those veins, which historically has always been 8.
What do you mean 9 to 22? That's a heck of a variance.
Yeah. Well, so Mother Nature decided to use 400 meters and stick 9 to 22 veins in there.
Right, okay. So you're not quite sure if it's 9 or it's 22.
Well, what happens is Mother Nature has a tendency of moving these things around. So when we drilled like we did 90,000 meters of drilling. We drilled for structure to hit all these veins.
Right.
Originally, we thought there was only 2 veins, eh?
Okay.
Then we found it was 9 to 22. So we said, okay, you know what? They're in this 400 meter thickness. So we drilled for structure. So we poked a lot of holes just to find out where the structure was. And sure enough, it was like 5.5 kilometers of structure.
Yeah.
We explored only 2 kilometers of it.
So how much drilling have you done? How many meters have you done?
90,000.
90,000.
Yeah, to look for it, just to find the structure. And it's not for grade.
You paid for that. So how much money's come into this company? Gone into
60
this company?
million.
60 million's gone into this company, and it's, what is it today?
Not even worth 10.
Right. Okay. So there's a lot of value in the ground and the data.
Yeah, but that's the other thing we did. Let's just go off a little off track.
Right.
This company, what we did was when we spilled out the silver cobalt asset.
Yeah.
These shareholders got a dividend.
Okay.
Which was a share and a warrant. The share was 5 cents. The warrant was a 10.
Right.
We gave them 20 million, all in all.
So 60 gone in, 20's gone out.
Yeah. Wait, let me finish. Now, as a junior company,
Yeah.
my market cap was under 10 million. I gave up more in dividends in 4 years. It was between 6 to 10 million, depending how you sold your shares of Canada Cobalt.
Okay.
You made more money on dividends than the market cap of this company. Now let's get back to what we were. No.
Tell me about it.
Unique. You think about it, how many junior companies have you heard that have paid out that kind of dividend?
Well, not too many juniors. And if you have paid it out, you're worth a lot more than this is. Okay.
Yeah.
So as you say, something's gone wrong along the way.
Yeah.
But you're saying you know a lot about this as a result.
Yeah. We
right?
made a mistake. We waited too long. That was the thing.
What are you doing with that data?
Well, right now, since we defined where the structure is, the next stage was to do a very large bulk sample. So we called it a rolling start, which was like 8 to 9 million tons. People say, my God, what are you going to do with that? But you see, this deposit, the nature of the ore body, because of the multiple vein structures, there's an empirical formula. So they say if you take 3% of the tonnage, it reflects the overall size. It's actually quite a large ore body. So we thought, okay, so we went and we did a deal with a local mill. So not only did the juniors get affected, but also the seniors got affected. So what the seniors did, they got rid of the people that did a deal with us, the intermediate management. So then we went to corporate in Toronto and said, we're ready to ship 2 million tons. And the guy said, well, who are you? I said, well, you guys signed the deal. And the guy said, we can't take 2 million tons over 3 years. Because they're afraid they might shut down, obligated to us to process rock. And so we said, fine, we're good.
Right.
And we walked away. Market crashed, we crashed. We went down $0.015, eh? So I said, okay, let's repackage it, change the structure, and we'll go ahead. I mean, it's 20% explored. We know where the structure is. Now we'll drill for grade. So we started another program. We actually initiated a program last year. We drilled at depth. We drilled down to 1.6 kilometers, and the results came back very high. So, if you look at, I think, page 10. Is it page 10?
Here you go.
Is it page 10?
Or it's page 6.
It was page 6. Sorry, page 6. There you go. So you look at it. We hit 8 grams over 6 meters. So the 8 grams is a number that's critical because the mine used to operate in the 8 to 10 gram. But it was the 6 meters that impressed us.
Yeah.
And then, of course, we hit 5.5 grams over 4 meters. This year, we hit 12 grams over 2 meters.
Right.
It's above the normal, but the thing is, we're still happy with
So
the grade.
there's some drill results coming back. They give you reason to be cautiously optimistic, I think the phrase is.
But I think we'll get it. Like, we're old school, right? Extremely conservative.
But if you look at the current resource, it's at about the measured and indicated.
We actually shrinked it.
Right, you've shrunk that.
Yeah, we had 2.6 million open pitable. We shrunk it down to 1.2, all 3 categories.
Right.
The reason we did that, fuel costs. It's cheaper for me to go underground than having a huge open pit.
Yeah, no, I've seen that before. I think, as I said, it's I've seen that in the uranium space, where obviously they've got a few health and safety issues as well, but that, machinable, as in autonomous vehicles doing the mining is cheaper than doing an open pit. I get that. So is that what your current thinking is?
Yeah,
saying, right?
It seems like we did all the studies in-house.
Yeah.
We sent somebody out to get third opinion. It's all focusing in the same direction. I said, okay, let's do that. So that's why our drill program now is focused on drilling for grade. You'll get some, we're trying to target 8 to 10.
Right.
Open pit smaller. You go underground, everything be electric.
Yeah.
Quebec has very low cost for electrical power.
So where's all this information coming from? Because look, you've got a bunch of people have put $60 million into this, right?
Yep.
They've pretty much lost most of their money, right?
Oh yeah.
So you got a bunch of upset shareholders somewhere in the ether going, this guy, too. Sure, I mean, you along with everyone else lost a bunch of money.
Yeah.
And I've looked at the management information here. I know you don't pay yourself on this one case. No one can say
I get paid $1 a year.
Yeah. Okay.
Cash.
You do remunerate yourself in other ways, though.
Yep, yep,
Right.
yep.
Being
But I paid in
consultancy.
paper. Yeah, I
We
paid
paid in paper.
Yeah.
Okay.
Yep.
Right. So just to be clear, that's the situation. That's been that situation for the last 3 years.
Yep.
Okay. So
Yep.
you're not sucking money out of the company.
Oh, heck
per
no.
se,
I
right?
actually,
But you've got to fix things for shareholders because
Yeah.
you've got a bit of credibility to get back there.
Yeah.
You think this plan, underground plan, is a better plan.
yep.
Share price is depressed at the moment.
Oh,
You
yeah.
think you can recapture some of the former glory by doing this? Is that the
Well,
thinking?
the first thing we do here is I have to admit to the fact we made a mistake. So I admitted it.
Yeah.
That's the first thing. To fix a problem, you got to admit the fact
Yeah, I
that you
think
made a
that's
mistake.
right. I think that's good.
And then we came back with a strategy. It was a different drill program. We initiated that last year. We're carrying out what
What's
they
it
said.
based on? I guess what I'm asking. It's not intuition. Don't tell me
Oh, heck
intuition.
no.
So
No,
where's
no,
the
no.
where's
No.
it come from? Who are you
It's the
working
way,
with?
well, there's quite a few of us in this equation. Like I'm a metallurgical engineer, but I work with a lot of geological people. It's the way we're drilling the deposit. Now we're trying to, what we do, trying to determine the continuity
Yeah. Yeah.
of the structures.
Yeah.
And by doing that, we're actually hitting these zones now.
Right.
We didn't do that before. Before basically was like, 50 degrees, we drill it, we poke it.
Yeah.
But it doesn't mean you hit all the structures,
Yeah.
eh?
Sure.
You might hit only one vein. But now what we're doing is we're trying to hit the 9 to 22 veins.
Right.
And there's a certain way of drilling it, we call it fan drilling, and you hit it. Well, Cisco did the same thing on their deposit and
Yeah.
the Malartic. They fan drilled. We never fan drilled, eh? We just 50 degrees perpendicular, we hit it, we just want to know where it was.
But this is all your internal data at the moment. You've got 90,000 meters
Yep.
circa, right?
Yep.
You've got a lot of data, a lot
Yep.
of holes with a lot
Yep.
of data.
Yeah.
Have you given that to someone to do some reporting to tell you that
Yeah.
underground is the way
Based on
forward?
based on that, that's why we changed our drill pattern, and that based on that, and we look at the economics. Cheaper to go underground, cheaper to use electricity,
Right.
do a high grade.
So someone's done the
Oh, yeah.
maths on that.
Yeah.
External consultant
Yeah.
said this is the way to go.
Yeah, actually, there's a study on CEDAR. The exchange will permit you to get this. I can't have two different resources on the same ore body. So
Okay.
the study's on CEDAR because you can't remove it. So if you go
Okay.
to CEDAR,
Yeah.
you'll see the study,
Right.
but it can't be on our website.
Okay. Interesting.
Isn't that something, eh?
That's weird.
Yeah.
Okay, so that's where you've come from.
Yeah.
I think good of you to go like, yeah, we know we did wrong, but we're not going
Yeah.
and we're not going to do that again. But we've got a plan to monetize this.
Yeah,
for
it's working.
Existing shareholders, right?
Yeah.
It also says for new shareholders, you can come in at a discount
Yep.
if you believe this story about this delivery of
Yeah.
this story to monetize the data that you've
Yeah.
got here. Okay,
Yeah.
so you think it's going to be higher grade.
It is, yeah. Well, the results are showing it. Right? I mean, it's the drill.
At what point do you do some kind of feasibility study on this to work out the
The thing is,
economics? Because that's the key driver.
yeah,
Here. The
see-
metallurgy is what?
It's simple. It's crush, grind, mill, pour. No magic to it.
It's crush grind mill, but also you mentioned in here cobalt and nickel as
Yeah.
well as gold. So do you get credits for those? Can you extract that? I mean, how does it all work?
Apparently, you can recover the cobalt.
Right.
Still early stage. The work is being done at SGS. The grades are very low. We call it a nuisance metal, but it's recoverable.
Okay.
It's economic.
And economic is the key.
Yeah.
Okay, so you get some credits for that
Yeah.
somewhere along the line.
Yeah.
Okay.
But it's we're focusing on the gold here, so that's what we're trying to do.
So you're a gold company, but you've got some credits with.
Yeah.
Sounds like
If it
cobalt,
happens, good. If not, it's
maybe not so much the nickel.
No, there's a lot.
But
of
you've got to
nickel
get rid
too.
of it. There's a lot of nickel too.
It-
Okay. So you're saying, listen out, there may be something to hear about cobalt and nickel
Yeah.
component.
But we'll
to
focus on
this.
the gold.
But you'll focus on the gold. Okay.
Yeah.
So small market cap at the moment. How much cash are you sitting on?
Well, about $500,000.
$500,000. So
The
things
burn rate is zero because we have no head office, and
right.
we really.
But what can you do with $500,000?
Well, we did a drill program, which we spent only about $50,000 on.
Right.
Actually, our cost, if it's a shallow drilling, it's under $200 a meter,
Right.
all in.
Right. But you're going to need some money soon, aren't you?
Yeah, the thing is, the company's kind of structured in a unique way. If you look at it, we have a lot of warrants out there.
No, so
It's designed to trigger at a certain price range.
Are people going to? What are they? What are the warrants at?
32,
Where are you today?
12.
Right. So where's the money coming from?
We can move markets if the story is right, and we call it riding the wave.
Yeah.
Like if you look at what we did historically with this company, you know, we went from a halted stock, 18 months, 90 cents, 120 million market cap. People are good. Like, you know, when you get the skill set, the older people have the skill set, and there's a lot of young people who have a lot of spirit, which is important for us as well, you know. And we did it with another company called CCW. We took that up too. Right?
No, I saw that, but where's it coming from this company? You're going to need some money at some point.
Yeah.
Aren't you? Don't know how much. Depends what you want to do. Don't necessarily say, but I'm just kind of pointing out, so, you know, there are a few things coming down the line, which you can see. You've been doing it a long time. Do you think you're going to be able to raise capital in this market, given the track record of this company, given where it's at the moment?
Let's be realistic. I wish we could trigger the warrants. It'll give us 7 million.
That's not going to happen.
In this world, anything is possible.
I think gold producers are seeing a reaction to the market since August, right? But they're producing. They're creating margin for produced poured gold, right?
Yeah.
Explorers, developers, not so much.
Oh no, the thing is,
right?
You know, but you know, here's the situation.
So you're not going to get a reaction in the market.
Well, wait a minute. People who didn't, how should I say? People who wish to custom mill a rock are actually walking on a property again. They have a mill. Producers. They realize the fact they have a lot of gold, but it's deep underground. They can't get workers to work deep underground. It's a permitted site.
Yeah.
You know, there's mills within 20, 30 miles of our property. You know, if they want the rock, I can ship it tomorrow.
But you and a bunch of other people are going to be, you know, chasing the same tolling contracts, aren't you?
Not too many people have that kind of resource available to ship.
Right.
We amended their permits already, a long time ago.
Okay.
It's just as, you know, that easy. Just turn on the lights and we're done.
Okay, so that's over there today. $500,000, not producing.
$500,000 is nothing.
It's nothing. It's nothing, right? No. But you're going to need some more money to be able to get stuff out of the ground, to get it to the toll mill, to be able to make some money, right? So I don't know how long that period is, but you maybe do.
Yeah, it's hard to call because, you know, it runs hot and cold, hot and cold. The reality is these people are finally admitting the fact that, you know what, we have to get somebody else's deposit.
Right. And
we're the only deposit on the Cadillac trend with that kind of ounces on surface that's permitted. The only ones.
So what's the upside here? Like flip it?
Yeah, sure. Look, give me paper for paper. You know, I don't want it.
Sit back?
No, let me tell you how I want it. They already asked the price, and then they went away. But I said, no, we're not going to do a share price. You know, I said, I want $50 to $120 an ounce in the ground.
Okay.
Yeah. And they're okay with that.
Sure.
So, I mean, look, we're trading at 10 million market cap.
Right. So it's not what you were, but it's something. You'd walk away with
something. Yeah, but you know, like even if they give me 20 million market cap, it's still
paper.
Yeah. But you know what? Give me $50 an ounce, which is reasonable. Even at 100 million shares out there, it's a 50 million market cap. I'm happy with that. Paper for paper, because I know they take this deposit, they'll drill it, then probably get 3 million ounces plus, because they're better than us. They have the skill set, they have the people.
And cash.
Yeah.
Right.
Cash is king, really.
It really is.
Yeah.
It really is in mining, right? It gives you optionality.
Yeah.
Okay, well, I guess we have to sit back and see if you can find people to have those sorts of conversations with. But you've got a plan.
We got a plan. The thing is, you know, if it doesn't work, we'll do another plan. Like, the thing about us, you'll find, like, we never let go, eh?
Well, I know from my conversations with you elsewhere that you're adaptable.
Yeah, adaptable, and I won't let go, eh?
Okay.
Yeah, I don't want to say this, but I'm driven by greed.
But not at the shareholders' expense, right?
I just to show you, we put in $450,000 in the last few private placements. It's not because I didn't believe in it. I believe in it.
Good. Yeah. Good place to leave it. Thank you very much.
Thanks a lot.
Appreciate that. Thanks for coming in and joining us. Keep us up to date with how things progress.
Yeah, we will.
You know, I think you've been really honest and frank about it, which is frank about it. It's good. And I think people should at least appreciate that component to it. But it says at least there's maybe a runway if you do get your strategy right, if you do get the delivery of that strategy right, it's got somewhere to go. Thanks again, Frank.
Always a pleasure. Thanks a lot.
Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.